Welcome to the Trusted Podcast with your host, Blake Johnson. In each episode, Blake interviews professionals in different areas of life that you need a trusted source of information, including trust and estate planning. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, trustedepa.com. Now, here's the host of Trusted Podcast, Blake Johnson.
Hello, everyone, and welcome to the Trusted Podcast. It's great to be back with you. Today, we've got Landon Mance as our guest. Landon is an entrepreneur and small business investor who happens to be a wealth manager for small business owners as well. I like that approach, Landon, because I always say I'm a business owner who happens to own a law firm. And so we've been friends for a long time, so I know we've got a lot of the same thoughts around that.
Yeah, no doubt, man. Hey, hair's looking great, by the way.
Yeah, the long hair is something new for sure. It's to that weird point where I'm thinking about cutting it. We'll see how long it lasts.
All right.
Okay, well, let's dive right in. First question I have for you is, let's start with your background. How did you get to where you are now, and what makes you qualified for being wealth manager / small business advisor? Yeah,
for sure, man. So thank you for having me on. Appreciate it. Always good to connect with you, brother. So I started my kind of professional journey back in 2008, 2009. I did an internship for a guy that was a financial advisor. At the time, it was still, I think it was City Smith Barney, I believe. And then it became Smith Barney. And then I think now it's just Morgan Stanley. But anyway, did an internship for a guy. I'm a people person. Like I love people. I love talking to people. I love hearing people's stories and just getting to know people. And when I was doing that internship, he'd like send me into the coffee room to get coffee. And, one of the older advisors would come in there, and I'd, try to chop it up with them. And they would they would just look at me like I had like two heads. And I was like, this place is freaking weird. This is not for me. So I eventually was like, I think I can do this guy's job. Did not want to do it there, that company. So I ended up getting hired and licensed through Waddell & Reed. So I started my career as an independent financial advisor in 2009, 2010. And then I ended up leaving the business about a year later for a short, 18 months. And that's when I moved from Southern California to Southern Utah. And I went to work for a buddy of mine that owned several companies. And that's when I kind of got my first real taste of small business. We had raised several $1 million, and we had a couple different companies. He gave me some equity in the companies, and went out and worked for him for 18 months. And then in December of 2011, I moved to Las Vegas, and I got back into the wealth management side of things, worked for JP Morgan, and then started my own practice in September of 15. And then I'll fast forward to 2019, 2020. We had a bunch of small business owner clients that we served. And we just started to realize that they needed so much more help and guidance and advice. And so we started doing things like getting the CEPA, Certified Exit Planning Advisor, and the CBEC, Certified Business Exit Consultant. And, my business partner has 20 letters behind his name. And, and we just uncovered this niche and this excitement and desire to serve the small business community. And so we really, around 2019, 2020, just kind of went all in on serving the SMB community. And around that same time, I started getting really I started getting really actively involved investing in small businesses. And then I started my journey of looking for a business to buy as an investment around that time. Fast forward to June of last year, my partner and I acquired Nevada Tree Service. So we've been running that business for about 14 months. He runs the business. I just kind of help lead and guide and advise. And then that has led into my next venture, which maybe we'll get to down the road in our conversation. But we're setting out to go buy probably three small businesses over the next 3 years with some outside money.
Yeah, and that was actually what my next question was. Like, I know you're transitioning from wealth manager to more of a fund manager. So tell me, what does that look like? What's the difference between the two? For most people, they don't know the difference between that and what that's going to entail.
Yeah, for sure. So the next stage of my professional career is going to be centered around being a fund manager. And we've been dealing with fund managers forever, right? So you think of a mutual fund, right? A mutual fund could have millions or tens or hundreds of billions of dollars under management in one single fund, right? And there's thousands of mutual funds, but at the top of the mutual fund, there is a fund manager, and that could be an individual or it could be a collection of a few individuals, and then they've got their team of people underneath them. But a fund manager is essentially a individual or a group that has most likely they have formed the fund, they have capitalized the fund, and now they are ultimately responsible for the decision making of what that fund invests in, and then they manage that fund on an ongoing basis. A wealth manager, which is what I have been for the last 15 years, is a much more comprehensive position, I guess. So as a wealth manager, we invest people's money for them. We do their retirement planning. We help them with their estate planning, right? Before they get to you to actually form the documents, we help them, think through that strategy, and then ultimately work with professionals like yourself to execute on that plan and that documentation. We do their insurance planning. So it's much more comprehensive. And then we also do a lot of business owner related services. So kind of like a small business consultancy is kind of, what we are alongside of being wealth managers. But the fund manager is very specific to, one investment approach. And that is where I'm kind of transitioning over to. So from being a wealth manager, which is much more spread out and comprehensive, to a very narrow down and niche focus, which is going to be going out and acquiring, a small handful of small businesses.
And you're going to have your clients be able to invest in this fund, right? That's the whole point, is you want other people to be able to invest. You're just going to be the one who oversees how, what businesses are bought and those opportunities, when to sell and all that stuff.
That's right. Yeah. So it'll be primarily, not exclusively, but primarily capitalized by our wealth management clients, who are mostly, successful entrepreneurs. Some are exited. Most, though, are current owner operators. And then we also want to make sure that we are including this group of future operators, because Brian and I want to have a pool of people. In fact, the meeting that I just wrapped up with minutes before I hopped on here with you was a guy that coincidentally came down from St. George. He's a small business enthusiast. Enthusiast. he's a small business enthusiast and an operator. And he's really interested in partnering with some guys like us to buy something larger and basically be the operator of that business with also some equity. So we're having a lot of those conversations so that when we go out and find a business, because Brian and I will not be running those businesses, we will partner with an operator to run them. In order to do that, we got to have a pool of potential future operators. So we're also building up that bench, if you will.
Gotcha. So yeah, I mean that sounds like that's one point of difference between traditional investing versus small business investing or fund investing. Can you expand more on that? Like kind of what the difference? I think most people think investing is just the stock market, stocks, bonds, mutual funds. That's it. But there's this whole other area that you're talking about. So what are kind of the main differences between the two?
Yeah, definitely. So all right, I'll talk about some differences and then maybe just for context, some similarities as well, right?
Cool. Yeah.
When you invest into a fund, it's a blind pool investment strategy, right? Because when you invest in a fund, you are essentially putting your money into the strategy, and then the fund managers, the decision makers, are the ones that are actually going out and making investment on behalf of their investors. So from that standpoint, it is similar to investing into like a mutual fund, right? Historically, private equity is an asset class that has greatly outperformed the stock market. Okay. There's different studies that you can look at, but I think private equity averages somewhere between 14 to 16% per year. And the stock market, the S&P 500, generally, you're looking at an average return of somewhere between 8 to 10% per year. So private equity tends to significantly outperform the general stock market. Obviously, huge variances there. There's private equity firms that have returned 40 to 60% return, annual return. And then there's, of course, some that are going to be probably lower than the stock market because they're underperforming. But on average, private equity tends to perform better. One of our big differentiators is generally to get into like a really good private equity fund, you've got to have millions of dollars to get into these great, funds. And so we are kind of like, I'm not going to say we're democratizing private equity because you still have to have, a couple $100,000 to get into our fund, but you don't have to have a couple $1 million like you would, for most private equity firms. My partner, Brian, and I are the GPs of the fund, the decision makers. So we both have bought businesses, sold businesses, started businesses, grown businesses pretty nicely. So we've got great experience to go out and do this on behalf of our investors. It's just that we're doing it like in the spirit of like for entrepreneurs by entrepreneurs. So we want our fund to be capitalized and invested primarily by entrepreneurs at these different stages of their journeys, right? Like kind of, we've got these, we'll call them like the gray-haired folks. They've been there, done that. Maybe they're not current operators anymore, but they really want to continue to mentor and advise and give back to the entrepreneurial community. Then you've got your current owner operators. And then again, we kind of talked about this pool of future operators, and we want to bring them all together in this really cool, tight-knit little ecosystem of about 30 to 50 investors. And we see a lot of value in doing that because as Brian and I go out and look at deals, we can bring these to our investors and say, hey, let's get some extra set of eyes on these from these 6 investors who have run businesses in this space successfully for 10, 20, 30 plus years. So we believe that bringing these people together can create, incredible value in what we are trying to do. And by the way, in our fund, we are not going to be using debt. So we're going to use all equity to go out and buy these businesses. So in theory, we'll buy about $4 to $5 million of cash flow for about $20 million, that's the size of the fund that we are setting out to raise, is about $20 million.
Okay. What, I mean, you hit on some of the things there of differences, but what's different about investing in, Main Street small businesses, buying those up as opposed to just, hey, here's my money, go put it in the stock market. That, you've done that as the wealth manager side. And how does that change, or what kind of things should people be aware of or expect, as far as liquidity and timeframes and that kind of stuff?
Yeah, good question. Yep. So when you invest in something, I don't care if your money is sitting in your checking account, or you are going to go invest into a brand new, super high risk startup that has a very high likelihood of going to zero. I don't care where your money is. Everything you put your money in is an investment. You put your money under your mattress, that is absolutely an investment. I don't care where your money is. It is an investment. There's just a risk return profile for every single way that you can hold or invest your money. So a big thing is when you put your money into the stock market, so you buy an individual stock, you buy shares in a publicly traded, mutual fund, or the traditional investments where most people have their money, because your money is generally accessible, aka liquid. A lot of people don't really understand like what liquidity means. Just think of it like, how accessible is your money and how quickly can you get to that money, assuming that it is accessible. So when you put your money into a stock or a mutual fund, you can generally get access to your money either same business day or within, call it 1 to 3 business days would be a typical time frame to be able to get to your money, to be able to access your money should you need to sell your investments and turn it into cash. When you invest into a private equity type investment or a private placement, there is generally no accessibility to your money. So you have to commit to having your money invested into that strategy for a number of years. Private equity funds can be anywhere from, call it 5 years on the short end, up to 10 to 15 years on the higher end. But now we're even seeing these really cool like evergreen type funds where they're structured as like a 30-year fund. So it's really long-term, committed capital. So accessibility is a huge factor, right? Because if your money is essentially inaccessible for a long period of time, well, you better be getting fairly compensated for that particular risk, which is kind of that liquidity risk that you mentioned. We'll call it the liquidity / accessibility. And so when you put your money into a private fund, you're generally not going to be able to get your money out for an extended period of time. And so in doing so, you need to be, you need to look for a higher return on your capital than you would in the stock market. So that's a big one. Another huge difference is that private equity can be a little bit more of like the wild, wild west. So like when people are going to invest in our fund, they are essentially investing into Brian and I and saying, we believe in you guys enough that you're going to actually go out and accomplish what you're setting out to accomplish. Whereas when you invest in a mutual fund that is managed by, Franklin Templeton, who has hundreds of billions or maybe even trillions of dollars under management, there is this perceived safety in investing in a Franklin Templeton or a Vanguard or one of these huge asset managers, because people know that they have the experience, they know that they have the financial resources, to, go out and spend, lots and lots and lots of money researching these investments. And that gives people a particular peace of mind. Whereas Brian and I, we would fall under the classification of emerging fund managers because we've technically never raised a fund. So therefore, we can't draw on past experience. So again, that's an additional risk that people have to understand and be comfortable with. And so again, as the risk return profile goes up, the riskier it gets, well, the higher the return that you should be expecting to get. So I'm not gonna say what we're shooting out to do from a return perspective, but certainly we need to be setting out to do significantly more than an 8 to 10% return, because if we're not, you're much better off putting your money into the stock market.
Okay, that makes sense. Yeah, lots of good stuff here. Unfortunately, we're running out of time, so just got a couple of questions left for you. One would be best advice you'd have for someone looking to get into investing in small businesses.
Yeah. Oh man, that's a tough one because there are so many different ways that you can invest in small business. I would just really saying what is your objective going to be for the money, and what is your involvement going to be in that investment, right? Because are there opportunities to just invest into one single small business? Yeah, there are. You probably have to be an accredited investor. So you've got to have a net worth of $1 million outside your primary residence, or you've got to make, a couple $100,000 a year for the last few years. So that's gonna exclude, a good amount of people. But there's so much talk these days about passive income. And for the most part, not exclusively, but for the most part, passive income is a total myth. It essentially almost doesn't exist. Passive income does exist for people that have millions and millions of dollars to invest, or it can exist for somebody that has very little to invest, but they are savvy enough to bring together people that do have money, and they get some kind of some skin in the game from that sense. But for most typical people, passive income is essentially a myth. But for people that might just have a little bit of money to invest, and they want to invest in small businesses, I would say look for opportunities where there is capital that is getting pooled together to go out and maybe acquire or invest into a small business. So people are bringing investors together to go out and buy a business. And maybe it's a business that you actually have some direct experience in. So maybe you're an employee of a pool service company, and people are bringing invested dollars together to go out and buy a much larger pool company. So you've got direct experience in something like that. So it makes it a little bit easier for you to wrap your head around and be comfortable, making an investment like that. And then just for time's sake, I'll mention one other thing, which is if you don't have a lot of money to invest, but you want to actually go out and buy a small business and be an operator and run that thing yourself, that's what's really cool about the SBA, right? The Small Business Administration, is that you only need about 10% down. So if you find a business that's for sale for $500,000, you really only need about 50 grand to bring to the table. So there's really incredible opportunities to go out and buy a small business with, not a lot of money down. And for people that don't have any experience at all running small businesses, well, guess what? There's incubators out there and accelerators and programs and coaching programs and a lot of courses that you can sign up for and to help kind of get yourself ready. But a great book to read would be Buy Then Build by Walker Deibel, or the Harvard Business Review buying a small business book. I'm butchering that name, but those would be two great places to start.
Awesome. Yeah, thanks for that. Yeah, the SBA has tons of stuff out there. I know there's even some stuff you can get with zero money down, depending on what the situation is. So, that's a great resource if you want to be an operator for sure. Last question is kind of a fun one. What's something, people wouldn't expect to know about you, or something you do outside of work, just to give the people something unique about you?
Yeah. Well, that's an interesting question. And the first thing that comes to mind, I've never actually said this out loud publicly. I've said it behind closed doors, but a lot of people would never guess that I am a member of the Church of Jesus Christ of Latter-day Saints, because I have tattoos, and I don't necessarily put off that vibe per se, apparently. But I got baptized as what most people know to be the Mormon Church, in 2018. So a lot of people never would guess that. I'm a diehard kind of adrenaline junkie. I'm still a regular coffee drinker. So there's a lot of things in my life I think that just throw people off. But that's something that very few people know about me or would ever think about me just if they had a short conversation with me.
That is interesting. I didn't know that, happened to be there for that. So that's cool. Well, Landon, appreciate you taking the time today. Really good stuff. I think we might have to have you on again, just because we can go deeper in a lot of these topics. But once again, appreciate you coming on. Thank you guys for listening, and we'll catch you next time on the Trusted Podcast.
Great. Thanks a lot for having me, man. Appreciate you.
You've been listening in to the Trusted Podcast with your host, Blake Johnson. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, trustedepa.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others. Please subscribe to make sure you are notified each time a new episode is released each week.